The largest technology sell-off in over 6 years. We just witnessed hundreds of billions of dollars being wiped off market names like Nvidia, Apple, Tesla, and more to name. But with huge switches going on, are we seeing the signs of a topping market? Today, we'll talk about the trillions of dollars of options expiration this week, the maximum pain levels that you need to be watching, the key zones that are happening around the world, and the opportunities that are arising in so many markets. There's so much to cover. Join us as we go through the markets for the week ahead. Well, I've got to say, everybody, markets just got absolutely ripped through Friday, and it was one of those times where NFP played out the way we think it does. First it rallied, then it dumped. The classic switcheroo. But is it part of something bigger? Today we'll talk about macro lead indicators and the hottest charts. But just a quick reminder, the week overall was very interesting. Apple was down, Tesla was down, Nvidia was up, and semiconductors were suffering through the Friday session. But remember, it was more rotation into defensives, which we'll look at later on, that I think are very interesting points. Could it be part of something bigger? Suggesting by semiconductors, it certainly could. Fear and greed index, that dropped from extreme greed back into greed, which of course is not much of a drop at all. And just a reminder, if you're interested in more stuff on options and some other write-ups, we have an amazing weekly newsletter coming your way. Free to sign up, links in the description and pinned comment down below. It's really easy to do, name, email, address. Let's get into the first bit of data then for today, and there's a lot to go through. Tech fund flows. And as we saw, the lowest level, so basically the most amount of outflows in over 6+ years for technology stocks just occurred. Now, funnily enough, it front-runned a little bit as we saw with dark pool activity. But if you aren't familiar with market runs, this is actually a record market run and one of the 10th biggest market runs ever recorded, plus 25% over the last 5 months. And we've seen it hit into the history lines of some serious points. Now, you might notice that some of these points brought with them sells, but they were temporary. And there was still more to come after these periods. So whatever happens here, it could still be an opportunity for the bulls in the markets, especially if we do get cheaper prices. Let me explain why, but first let's have a look at some of the data coming out. JP Morgan are suggesting that they've already started to look at sells. Positioning in US equity futures have actually declined lately. Now note that this is a longer term chart, and of course it can take some time. Along with this, we also saw CTAs start to reduce, and I've got some updates on the charts that we shared over on our X account coming up in today's show. Nvidia in bubble territory. Now, as you might know on this channel, when I hear the word bubble, usually there means more to come, and you can kind of see why. We've hit bubble territory a few times and actually rallied for a long future. That doesn't mean, though, that we won't have pullbacks that go sideways to down, and Nvidia might have just shown its hand with a huge trader coming in and obviously dumping massive portions. In terms of what that means, we've just hit 90% of bubble territory for the stock, and we need to discuss the charts a little bit later on today's show because there's a lot to go through. Some other funny charts that have been going around is, of course, Nvidia and its link to cocoa. So with that sell, does that mean cocoa is going down? You let me know in the comments down below. Now, why is this important for Nvidia to actually do this, to have like a little bit of a breather? Well, it's got to do with how far it is away from things like Keltner channels, mean reversion, and everything else. You can see it's incredibly elevated, and it's actually 5 standard deviations away from many indicators out there in the markets right now. So let's talk dark pool activity. This is where a lot of it began. We'll talk Bitcoin just for a second here. We did see a huge transaction coming through the ProShares Bitcoin Strategy ETF. Could it be a sell, somebody buying in, or someone actually taking some profit here? You be the judge, but it is something that's interesting because as we saw recently, semiconductors across the world dumped hard on Thursday, and Friday's result was, of course, a rally into a sell-off. Now, this is not just happening on SMH, which is a massive semiconductor ETF, but it's also happening through many different ETFs. We saw cows, some of the biggest holders, QCOM, etc., fall off after that huge sell came through. Dark pool again. We had Taiwan Semiconductor Manufacturing, TSM, having a huge transaction. Obviously, it fell off after that. And generally, when we're seeing large trades like this, we are leading into a period where someone is dumped that's probably in the know. And even though there might be a little bit of rallies afterwards, overall, the trend can be negative for a little period of time. It could be a breather and an opportunity for bulls and bears out there right now. What about USO? Something we've been talking about is oil. And of course, oil has not broken through our key level we'll look at later on. But a huge trade came through during this consolidation. Is it a buy or a sell? We don't really know yet, but we'll look at the key levels to be watching for USA later on. All right, let's talk about everything to do with opportunities on the horizon. Whenever you see a sell, you're always going to be asking yourself the question of, well, what should I be buying if markets dip? Well, in general, you should be buying, of course, great companies at good prices. But on top of that, you also want to be thinking about things such as forward PE. And you can see here the equal weight PE at the moment is around 20x, which is, I would say, not cheap, but obviously not super crazy expensive. Now, let's say, why is it not crazy expensive? Because we have seen higher PEs before. Remember 2021? It was way wilder throughout the market. And of course, 1999 to 2000 actually ended up having one of the highest PEs ever recorded. But where are the opportunities right now? Well, it could be mids and small caps. And as we've talked about, mid caps have been actually beating a lot of the market recently. And some of the underloved small caps could be the opportunity, especially if the market continues to fall. You'll find defensive sectors or markets that have been beaten down often rise as money flows around in a big circle throughout the markets. And of course, a lot of this has to do with people hunkering down on potential sentiments and stuff. We saw bull bear survey reports come in incredibly bullish in terms of everyone being bullish last week. We saw massive standard deviations away from normal in terms of overall bulls. And as we know, if we looked at the actual bull bear spread, it's pretty much just in line with the market. But overall, the percentiles were really, really high. Now, this is where things get interesting. This week's $1 trillion option expiration. The S&P performance over the last 2 weeks into March OPEX is a huge deal. And what ends up happening here, we need to be paying attention to. So we're in pre-OPEX week right now. And usually it's not necessarily super negative, but the week after is not very good. And you can see here the Monday actually tends to be a more bullish day. The Tuesday is not that great. The Wednesday's okay. The Thursday's pretty good. And the Friday's mediocrity at best, ending in a generalized week that's maybe slightly bullish, slightly neutral. The post week, however, doesn't tend to do very well, only up 5 times and down 17 times. So of course, post OPEX is often very volatile. We have a lot of news coming into this week. This is clear to be volatility in general. So opportunity for day traders, swing traders, and everyone else out there. Where have the opportunities been? We talked about utilities before, but obviously we've seen gold stocks as well have a massive rise up. And we've talked about the ratio between gold stocks and of course gold spot. As gold spot goes up, gold stocks continue to be incredible laggards to the price overall. So are gold stocks going to be an opportunity? Are they still an opportunity after rising so much in the last week? Yeah, maybe, especially if you're a believer in gold getting to the 24, 2,500 or even 3,000 levels. Let's talk about one of the biggest flows and biggest precursors to a market sell-off. Obviously, global CTA trends and S&P 500 CTA projections. Now, we know that Goldman Sachs put this out last week and we shared it, which was the idea that in pretty much all of their model history, they were looking at sideways to down in the overall convexity of the CTAs. Now, this meant that they thought that they were going to see sell-offs in the CTAs. And of course, we did just see that. And why is it important? It often precursors market pullbacks that are a little bit more considerable. Now, it doesn't mean they're huge, but they're a little bit better. They often go towards mean reversion, which is the 20 weekly moving average on the markets. Now, what did we just have? Well, I've shared this over on our X account as well. And you can see here that the S&P 500 CTAs dumped pretty big, a few days in a row of actual selling across the board. And the same type of thing happened on the NASDAQ, which I'll also share over on our account on the X level. Now let's talk about everything to do with why this is normal to happen around this year. Seasonality is a huge part of it. Yeah, we've started to see some weakness. And of course, the market has been in general looking at a sell-off into maybe this week's OPEX. Now we know that even the post-OPEX results, if we take everything into consideration and not just election years, is also quite negative. So it's this time or really never for markets in general that tends to be the weakness period. So let's just quickly talk Bitcoin for a second, because of course we saw over 5% drop last week, actually 15% in Bitcoin. Now that generally means that if it happens at an all-time high, we often go into a sideways consolidation. And so far we've been hovering up and down for quite a few days. Does it change the longer term trend of Bitcoin being bullish? Not really. It's probably still in a very big bullish run. You can see in all previous times, while we've had some kind of hiccups in markets, we've often ended up leading into new all-time highs. And just remember, the momentum remains very strong into this year's halving cycle. Will we get a cheaper price on Bitcoin in the future though? I would say yes, because it's done what it usually does. It rallies into this period, it then tends to weaken after the halving cycle, and then it tends to have absolute ballooning euphoria occurring after that point. You can see it really demonstrated on this chart where we've had halving cycle run-ups. The halving has happened, it's dropped off from that period, and then we've gone into super cycles where everything becomes super overpriced. So just remember, FOMO in this world, not usually better, as there's many famous quotes out there that often say that it is better to wait for certain opportunities on different markets. And there are so many different markets out there. But whether you're hodling or not, right now, it does seem like this year could be the year of the crypto. Let's now discuss the markets. In general, obviously, the stats still remain incredibly bullish. So if you think about over the next 12 months, what's going to happen, even if we get a really horrible pullback right now, or a good pullback, probably a healthy one really for markets, we're still looking at a fairly bullish period on the horizon. Now, this comes down to quite a few things, but do remember that defensive positions have been starting to come through. We've had energy stocks doing a little bit better. We've had utilities doing a little bit better, and things that are beaten down, such as clean energy, solar, gold, all of these types of things actually showing strength. Take a look at this one though. We had semiconductors rallying up multiple percentage points in the morning and then dumping hard by the end of the day, losing 3.92% after the non-farm payrolls. That actually takes us to a 5-day average now where semiconductors are nowhere near the lead anymore, and they're starting to be the middle of the pack, only 2% up. Metals, nice. Utilities came through. And of course, we see gold stocks continuing to hold really well as all-time highs for gold spot are reached and gold stocks try to play catch up. Let's talk options. Absolutely massive options. And you can see why this week, the trillions of dollars, the options expiration in general is so important. Almost 58 million on the options, 58% calls. So that means that everyone's still BTFD. Now, obviously, we fall through some key levels that's going to need to be paid attention to, including our channel on the S&P and Qs. And 31% of trades were retail traders. That's a huge deal. And the options were going ballistic. Nvidia had 2.55 versus 1.5 on the puts. We lost 5.5% on the day. And you can see here that SMCI also trading at huge ratios as well. And even the S&P during a sell-off and the end of the session had almost more calls in it than puts. That's pretty unusual when you think about it. Some massive options. We're going to have to be paying a lot of attention to it this week. So make sure to subscribe as we'll cover off all the key levels for zero DTEs as we go through each day. Now let's talk about VIX. Are we through 16? No. Does that mean the bears are in control? No, they're not. And that's the truth. I mean, when you look at things like VIX, you're just not seeing that huge spike through the 16 yet that we've been looking for a while. Our other reads as well haven't exactly been going super bearish. So even though the markets are down a little bit here, we still need a little bit more to be seen to go with the bearish side. S&P 500, you can see here that the central bank liquidity remains very, very stable. Yields obviously did drop off, and a lot of people will be scratching their heads and saying, isn't this a good thing? I don't think it's a good thing anymore. Remember, the market's been growing on growth, good data, all of those types of things happening. If we're starting to see weakness, non-farm payrolls obviously were still relatively strong, coming out with a bigger number, then whatever's going on with yields here could be the opposite of what you have led to believe over the last year. Home builders did drop substantially, down 1.21%. Transportation's also dropped, indicators of weakness in the markets. But things like our bond indicator here didn't drop below the 1.14 ratio. Now, if that had happened, of course, it's probably on across all market segments and not just maybe semiconductors. What about the US dollar? Well, it already precursored the non-farm payrolls, it seems, and what happens with yield. We saw drops across the dollar index. And if you've been following the show for quite a few days, we've been talking about the Euro USD and the strength there. Now, they actually hit our first target level on the non-farm payrolls news. And congratulations if you've been a bull on the euro and weakness in the dollar. That's a really excellent trade. And it's actually been holding up right into the event. Now, if we get through 1.10, so 110, we're probably moving all the way upwards of around a 111.20. So there could still be a lot more opportunity if we break out on those particular markets across the board. Let's now look at gold. Massive moves, 21.78. As we've been talking about last week, was a massive close for gold. And although it hadn't made a new all-time high, the chances of this occurring were very high. Now, we did a poll. Most of you thought it was going to happen as well. I think it was like 50-something% of you, and it did. Now, this is still a very strong weekly, and every oscillator under the sun is overbought now. Now, does that mean it has to stop? Well, I think you know the answer. The answer is no, it doesn't have to stop. But pullbacks at this stage to be met by bull demand as far as we're seeing currently in the price action. So that means that although the price action is very, very strong on gold for now, there will eventually be a pullback. We have to believe that there are bulls there. So there could be a lot of day trade opportunities moving into those markets. US oil, on the other hand, a little bit weaker. So oil didn't break through on Brent, which is 84. We're looking for the barrel. And of course, we continue to struggle around that 80. Now, XLE, so that's the energy stocks, they've been doing quite nicely. But oil per barrel, still not able to get up. Did it break to the downside? Not quite. Did it break to the upside? Absolutely not. Set your alarms for $80. A close above there is going to be so significant for oil. It's finally going to get out. And you can see it's been coiling for quite some time. So I expect either way to be explosive this week for that particular commodity. What about copper? 3.95, still too much for it. You know what I think about copper? This is an XME style trade as well. So if we see copper really boost through, expect XME to do incredibly well. And you can see here that we may have an inverse head and shoulders, a left shoulder ahead and a right shoulder with a big neckline coming through the middle. There's big levels coming up here for copper. Be watching. Now, if you look at any kind of pattern ever, whenever you're doing analysis, always take the room here and see whether it proofs to another key level. The reason why you're doing that is because you love to see patterns that are proofing into key zones. So over here, we have obviously a supply. It becomes a resistance, or that's the supply that's acting off. So it makes sense that this would be where your next levels would be, somewhere around here and here in terms of take profits. A lot of room if copper is able to break through. So for the first time in a while, we're talking about that again really heavily this week. Now let's go into single stocks before we look at sectors and crypto. And first up, we've got here Tesla. Now Tesla has been pretty weak, bad weekly closure for it, obviously right on the lows, but not really positive signs for Tesla. And we kind of expect it to maybe return back to 163.61. Now, there could be opportunities on this. The main issue is going to be manufacturing problems. We've been talking about the AI side and the robots recently, and whether they can even scale that up is going to be the biggest question. But data is this decade's trade. So whoever has most data is generally going to be winning. So at the moment, of course, NVIDIA is doing incredibly well because it's got the manufacturing hub for it as well. But there are many opportunities in the AI world. There'll be horrible busts and there'll be big booms in certain stocks. 164, worthwhile watching on Tesla this week for reactions. And in terms of if we get underneath that level, it's probably worthwhile paying attention to lows under 153. Because if it hits that level, I could see a big bull coming in out of nowhere and picking up the stock. Now let's talk NVIDIA, because this is where the big sell-off occurred. Now, just to give you an idea, from top to low, it was 11.17. Now, I generally want to see even more sell-off, and we did actually see a post-market of another negative 2% on this stock, so it may continue to fall off. Now, if it does, what's probably going to happen is we're probably going to see BTFD. So similar to PanW recently, which we'll look at in a second, we actually had a buyer come in very heavy. Now, it turns out Pelosi was also on that one, but as we mentioned, it was more than likely going to do this and then kind of peter off. Now, there have been some stocks that have done that, some that haven't. Let's look at the evidence so far. So PanW being the first one, Palo Alto, and you can see here what ended up happening. We got that BTFD after one more day of sell, and then we came up, and then, of course, everyone got way too hyper on the idea Pelosi was in it. Remember, she was here. She also was here. So she technically is down on this position. So it's been dropping since that point. That's kind of like normally what happens. But there are some cases out of that one. SMCI here, or unless it's SMH, but let's have a look at SMCI actually. So SMCI, Supermicro Computer, obviously dropped the other day as well, and it did a huge drop. Then it rallied up. That's pretty normal, and BTFD was well at way. Then it dropped, which is again pretty normal, and sideways is what I'd expect. Unfortunately, for many, it went above, and that's why if you're ever going to trade the short end, you always have to use an option. But this is a very interesting case because, of course, we went all the way to 1200, and then now we've seen some weakness come into the back pair. And you can see here there's 1, 2, and 3 wicks coming off those lows. So for day traders, I think they're going to be looking very heavily at this most recent little low level of 1089. And if it breaks below that, maybe that's going to open the floodgates for more SMCI sells. Very strong stock. Obviously, if you're hodling it long term, you're probably going to do all right. And it's being included in the S&P and everything, but is worth paying attention to. Then comes semiconductors. Now, we are very far away on all of these from what we call mean reversion. Now, mean reversion is basically the return back to the 20 weekly moving average. And this is used within Wall Street's kind of main algorithms. And also, it's just a general considered thing in markets. It's basically just that kind of idea that markets come back to their mean eventually. Now, in this case, it hasn't happened for a while. And we're still very far away from that point. Again, a big sell-off like this in semiconductors ends up locking the trade in at what you would call a shooting star or a pin bar in terms of the overall week. We know that activity was massive. We also know that options is huge this week. So whatever's going to be most profitable on the option side per day is probably going to be what happens with this particular stock. I'd expect it to lose a little bit more and then maybe find some buy the dippers. That tends to be what happens here, but it could be part of a big flush. And we have to expect at least a 211 ideally through this sell to make us get back to at least daily 20 moving average, which has been a bought level a few times now through the run. So semiconductors certainly in focus. Now, a lot of people have been asking me, what do I think about Apple? Well, in some ways, I think it's bottomed. And in others, I don't think it has yet. So what does that mean? Well, if you're thinking about a long short style where Apple versus the Q is something you're looking at, then Apple looks to be returned back to a very nice ratio style trade. So this means that if the NASDAQ loses 1%, I expect Apple to lose around the same, maybe 1% or even less. And recently that's not been what's happening. Of course, Apple's been getting absolutely destroyed while Qs have been going to new all-time highs thanks mostly to Nvidia and Meta in real terms. Now, if we have a look at Apple, the actual stock itself, you can see it's trading at a pretty key level, but it also could be part of a double top, which is this. So if we break through this zone and we get below this low over here, which is approximately priced around 166, then we're probably seeing a flush in markets that could be incredibly big. And although I still think Apple will hold versus the Qs, overall, you can see here that might push a 130, 140 narrative on one of the best stocks in the world, at least at certain points. Now, maybe you're agreeing with the market and you're seeing what I've seen for a little while now, which has been realistically a slowdown of innovation in this company. But yeah, this is going to be a very big point. And for some dollar cost holders, they'll be looking at this level and saying, yes, I like Apple. And that's why there was a bounce here. Probably too early to tell. I would say we need more structure. We will be following the stock this week, so stay tuned for that. Now for the German market, one of the best indices in the world recently has started to possibly show signs of a false break. And we mentioned that this would be the most important thing to see, and we'll be updating you guys on what's going on with the CFD and retail positioning this week. Because if this makes a new low, then of course, what's going to be happening? Well, we're going to be seeing weakness across the German market. And that's been a very strong, big bullish position for quite some time now. So an unwinding of this position could be pretty serious. Now, it's too early to tell yet. We're at an extension, which we already warned about. This is usually a bit of a profit target for the street itself. And I could see this being a very important week and a very important point. Stay tuned for the German DAX. HSI, Chinese market, remains still in a bullish position after being horrible for quite some time. And we're looking for it to break through 16700 this week. If it doesn't do that, then it's not really on a momentum-based trade. What about the Aussie market? Well, it pushed and it went through 7800 easy, and then it went all the way up to almost 7900. Big moves across the Aussie 200 at the moment. Obviously something we're watching on these charts, and we'll be paying a lot of attention to it moving forward. Not a great Friday close. It's probably going to do better if copper breaks through. So, of course, copper could be a good consolidation with the Aussie 200 to show that metals, energy, those types of stocks are back on board. Now, let's move over to the US 2K. So close to getting an amazing weekly closure. It did close at a new high. You can see here the supply over on the left-hand side. It's still theoretically bullish on the charts. So if you're liking the Russell 2K, yeah, it's still okay. But you'll notice that I've got some alerts here telling me that a short-term top is in, and that we are probably expecting maybe downwards of around 2,000 on the Russell before hopefully seeing a resumption. Remember, we are in an ascending channel at this point, and this is a very important level for these markets. Another channel that we need to be watching is, of course, this one here, which is the Qs versus the SPY. Now, we've had it on almost every daily show recently because, as we know, if we break below this downward channel, then we're breaking a trend that has been intact since the October lows of last year and has given us all the take profit targets in general and also all of the signs of when a bottoming has happened. Have we seen a new low yet underneath the 0.85 ratio? No. If we do, is that a big deal? I would say it is. So we'll set an alert for that together right now, and you'll need to be paying attention to it. Let's have a look at the NASDAQ. Key level remains at 17,788. Break below this, and the trend line probably tells us that short-term weakness is in and that swing traders, day traders, and flow in general, including the CTAs, will remain negative for a little period here. This trend has been, in general, incredibly bullish. So technically the bulls are still in control, even though semiconductors have shown a very worrying first sign. Let's move over to the S&P 500. S&P 500 hits a new all-time high, taps in very close to the 5,200 level, which is that call wall, and then we see sell-off. 51.29 still too early to tell anything. Until it's below 50.50, we can't be sure that swing traders are in. The daily 20 moving average remains bullish. So in general, if you're still a bull in these markets, although it could be elevated, single stock sectors remain very, very key. And remember, there are several different opportunities out there. We mentioned utilities before. Utilities have remained grinding up for now while this market's been in a little bit of turmoil. So there's always a different opportunity on these markets. Let's now talk crypto. So Bitcoin looks like it's trying to go for a new high here, a new all-time high, and you can't really tell here that there's any weakness in the market. I would have expected probably someone to try to sell around this point. Now, I don't sell Bitcoin personally. I think it's too dangerous. You often get wiped during these huge rallies unless you're using some kind of options market, and then it becomes too expensive. But it's an interesting conundrum. So 15% sell-off. Usually we get a bit more like negative 20 to 25%, and we're about to reach possibly a new all-time high. The market during the weekend could do this, and then maybe even we still see sell-offs. I have too much FOMO though on crypto right now, but if you're a Bitcoin maximalist, you're going to like what you're seeing, and you're probably going to start liking alts quite a lot because these will be having some interesting points. You can see here that Ethereum is about to crack in on 4,000 overall. Let's now talk options market for the S&P, and we know that one of the key levels here is, funnily enough, 493, which comes underneath, well underneath where we are right now in the markets. So if technically where the options are right now and Wall Street wants to make the most amount of money this week, then it seems to be that at this stage, the market would want to go down, pushing to a lower level to make sure that they hit the maximum pain zone. This is only one read, and it would be better to use day trades with it. But in terms of where is the most amount of money to be made currently, possibly by Wall Street, it's most likely going to be on the lower end at the 493. If you're interested in finding out more about this stuff, make sure to subscribe to our free weekly newsletter. So much coming out this week, guys. And remember the news. We have CPI on Tuesday, which is going to be a big volatility event, maybe push our VIX through 16 finally. Core PPI on Thursday. And then, of course, we also have Friday being the options expiration. So there's a lot going on this week. There's bond auctions, there's CPI, there's retail sales, and everything else. We expect it to be volatile. The VIX is going to spike up, and I think semiconductors is going to be where the wild action is if you are brave enough to be on both ends. Good luck, everybody. See you in the next one. Bye for now.